Yo, everybody, back at it again. Once again, your favorite entrepreneur, your boy, official Tyree Samuels. And what we're going to be talking about today is, yet again, we're actually going to be going over another profitable Forex setup that you have the ability to take advantage of. Whether or not you took advantage of it, that's neither here nor there, but I'm going to make sure that you don't miss out on another one. If you guys want to know exactly what setup I'm talking about, make sure y'all stay tuned for the next clip. I'll see you soon. Peace. Yo, everybody, back at it once again. Favorite entrepreneur, but your boy. Whoa, hold up. Back at it once again. Favorite entrepreneur, your boy, official Tyree Samuels. And before you go any further, make sure you guys go ahead and hit that subscribe button, because YouTube needs to see that you guys are taking value from your boy, and that's one of the main ways that they can see that. On top of that, if you guys look directly underneath the subscribe button, you're going to see the thumbs up. You're going to see the like, and then also don't be shy. Go ahead and leave a comment. Okay. Now, with that being said, as you guys saw on the thumbnail, we're actually going to be going over another profitable setup, which, keep in mind, I don't run away from my losses, but I definitely make sure you see me whenever I win. Okay. So what we're going to be talking about today is going to be Usdchf longs. And, as you guys saw in the banner, we actually, originally, whenever I created the thumbnail, we were up 92 pips, but the market kept going in our favor. So we actually got more than what the thumbnail said, which is actually, what does it say? Yeah. So 92 pips. So we actually got more than the 92 pips. As you guys can see, we actually maxed out at about 137. Okay. So let's go ahead and do what we do. Right. We're about to go ahead and break this down from the top down to the bottom, so you guys can see why we took it, and why we did what we did. So what I'm going to do is I like to be able to actually use the replay tool to be able to, kind of backtrack and show you guys what the market looked like at the time that I took the trade. Of course, if you guys don't know how to utilize the replay tool, make sure you guys look in the top right-hand corner. I actually created a YouTube video going over how to use the replay tool. Okay. So with that being said, the first thing I want to be able to start off and do is I always tell people, once you get on my calls, make sure you figure out what is your favorite time frame to do your analysis on. Okay. So me personally, my favorite time frame is going to be the 1 hour time frame. So actually what I'm going to do is I'm going to go ahead and we're going to overall look for a bias, based off the 1 hour time frame, and then I'm going to go from there. So the first thing I like to do on a 1 hour time frame is, the first thing I want to see is I want to see what is the overall trend of the market. Okay. So for me personally, yes, you've heard the corny generic term, the trend is your friend, which is 100% true. The trend is your friend. But what you guys also have to understand is the trend is something that you guys need to be aware that, yes, just because you see and identify the trend doesn't always mean that you got to trade with it. But if you're going to trade against it, you need to actually know that, because if you're trying to swing trade, a counter trend trade, might not go in your favor. Okay. So what can I identify, right? I can identify this is a uptrend. Okay. How am I able to identify that, right? So we see the market. So we see the market is going up, right? Retrace, went higher, right? Retrace, went higher, right? And at this point, the thing that I noticed is the market actually broke above multiple structure highs, previous structure highs, right? So what does that actually mean for me? Now, in the grand scheme of things, for me, what that actually identifies is we are in a valid uptrend and the market continues to break higher highs. So that means that we continue to go higher, right? Now, in my personal opinion, this low that is set off this 1 hour, as long as this low doesn't get violated, I'm going to continue looking for buying opportunities. I'm going to continue looking for uptrends and so on and so forth. Okay. So if I go ahead and get rid of all these, right? The other thing that I can actually see is, if you guys pay attention to this move, okay, what did this move also do? Okay. This strong uptrend also did what? It once again broke a previous structure high. So the market is literally saying, hey, I don't know what you think, I don't know what you thought, but I'm trying to give you a hint, fellas. If a girl, back whenever you were in elementary, she might give you a hint, but you might not identify that she's hinting that she likes me. Okay. And the market is, hey, bro, like, I'm not going to tell you that I'm going up, but I'm trying to tell you that I'm going up. Okay. So what I actually took from this is we're able to 100% confirm that this is an uptrend. Okay. Now, with me understanding that this is an uptrend, I want to be able to see, okay, now that I know this information, am I going to look to continue taking the market higher? Or am I going to look to take the market lower? Now, the final thing I want to be able to take advantage of is going to be, utilizing our Fibonacci tool. So the Fibonacci tool, okay, which if you guys don't know how to use the Fibonacci tool, make sure you look in the top right-hand corner. I will also have a YouTube video referencing exactly how to be able to utilize the Fibonacci. So with that being said, the Fibonacci tool is actually going to be something that I like to take advantage of to be able to see me how deep of a retracement the market is going to give me. So I actually have a couple of different fibs that I utilize. So I'm going to pull out the fib that's going to best help me understand the situation. So the thing you want to understand is, remember, when you're utilizing the Fibonacci tool, it's meant to use for a continuation. So we had the structure break here. Okay. We had the retracement, right? Now notice how deep of a retracement the market gave you. So the market gave you the deepest possible retracement within the Fibonacci, which is the 88.6. And as soon as you saw that market react off the 88.6, what did it do? It gave you a very aggressive move to the upside. So 1,000 gazillion %, I am looking for, a possible opportunity to take a continuation higher for a buy. Now, once we've identified that, we still need to be able to figure out, okay, where are we going to get in, where are we going to put our stop loss, where are we going to locate our targets at, right? So for me, the thing that I want to be able to show you guys is this right here, right? Pay close attention. So now what I want to be able to look for is I want to be able to look for two different things that I like to be able to identify as additional confirmations whenever I'm taking a trade. One of which is going to be divergence. If you guys don't know what divergence is, look in the top right-hand corner. I also have a YouTube video going over divergence, okay? So the divergence is basically going to be, in a nutshell, the concept of whenever you have the market going in one direction. So the reason why I switched this from candles to the line chart is it'll be easier for you guys to follow with what I'm about to explain. So I want you guys to notice, right, from this point to this point that I'm identifying, we can clearly see that the market is going down, okay? So to be able to identify divergence, you would like the indicator you're utilizing to interpret the divergence to be going in the complete opposite direction, okay? So how I'm going to identify that is going to be like this, okay? So notice, remember, if this is going down and I would like the indicator to do the opposite of down is obviously what? Up. So notice if I were to take a trend line tool, okay, like so, bada boom, okay, and then don't forget you got to hit them with the bada bing, right? You guys are going to notice from this low to this low, the market is going down. From this low to this low, the market is going up. That is going to be our divergence. If you want to be technical, you could put it here, right? But I like using this point. So technically I could take it from here, okay? So let me actually move this over a little bit, and here we go. So the market is going down from here to here. The market is clearly going up from here to here. Divergence is one of my favorite things, if not my personal favorite, to be able to utilize to understand how strong of an opportunity do I have in the market, because this is great to be able to detect divergence. It's great to be able to detect reversals. Even though this is an overall uptrend, the market is retracing, which means it's going down. So the reversal will be to go up. This gives me the ability to have the confidence to take the reversal. Okay. So if we get rid of all that, go back to the candle chart. The next thing I like to pay attention to is going to be the extremes. Okay. So whenever I'm utilizing the RSI, right, anything as far as the white line coming outside of this purple box that you guys see identified in the middle, that's what I want to be able to see to give me the ability to detect if the momentum in that given direction is weakening. Okay. So what do I mean by that? Notice how the market, right, created this peak up here. Okay. And then gave us a very deep drop. Okay. Now this deep drop, it was actually showing us, notice how the white line came outside the purple box, went back in, came back out, right? And then it was basically playing right here, teeter-tottering on the edge of the purple box. All of these instances are data that you can start accumulating to be like, okay, the market might not be ready to go up quite yet, but it is showing me that the downward momentum is becoming weaker and weaker and weaker. So it's basically like, get ready whenever the opportunity presents itself. It's already told you it's getting weaker. So it getting weaker means it might be getting ready to go in the opposite direction. Okay. Now, those are going to be my primary confirmations. Okay. So basically what I've just shown you guys are the confirmations that I look for to be able to detect, whether or not I'm interested in this setup. Once I get interested in the setup, I'm then going to start diving in to see, is there an opportunity to get in? Now, the way that I'm going to get in is my signature entry, which is an engulfing candle. Once again, if you guys don't know how to be able to identify a good looking engulfing candle, look in the top right hand corner. I'll also have a YouTube video for that. So the engulfing candle, a lot of times on lower time frames, you're going to have some sort of impulsive move. Okay. So usually after you detect divergence, it should, right, give you some sort of aggressive, impulsive move in that direction. That's normally what I identify, okay? So if I see that this impulsive move is about almost 100 pips, about 80 to be exact, on Usdchf, which is not necessarily the fastest moving pair, I also noticed that there is an imbalance that was left in here, okay? Now, I know I got a YouTube video for everything. I have not made a YouTube video for imbalances yet, but trust me, I will get around to that. So an imbalance is basically going to be, a gap or void or improper pricing. I don't know if I'm saying that properly. Improper pricing, insufficient pricing, okay? Inefficient pricing. So a lot of times whenever the market moves aggressively in a direction, it may leave an imbalance. A lot of times the imbalances are footprints. Just like how you might be in the woods looking for Bigfoot, you see, or you're looking for the Yeti and you see the big footprint in the snow. See the big footprint in the dirt. I'm talking crazy. See the big footprint in the dirt. This is basically like the market giving you a footprint, okay? So imbalances a lot of times can mean that is the direction that the market wants to start trending in, but just like anything else, you guys know a lot of times before the market continues, it has to get some type of retracement or pullback. So, generically speaking, you would like the market to pull back somewhere within this range, right? There's also another imbalance lower down here. Okay, so if I actually remove these tools, notice right here, there's an imbalance, okay? Just like there's an imbalance up here. So what you would like to see is the market retrace somewhere back within these levels before you get that continuation higher. Now, it's two kinds of traders, in my personal opinion, okay? It's the traders that look to trade off of zones, and it's the traders that look to trade off of a specific entry. Me personally, I like to trade off of a specific entry because I like doing pending orders, buy limits, sell limits, and I'm lazy. I want to be able to go to sleep, wake up, know that my trade is going to activate. I don't want to have to sit here, look at the chart, wait for it to get to the zone, wait for it to give me a rejection, and then execute by market. That's a lot of work. But I'm still going to show you guys how to be able to take advantage of both instances, okay? So what I'm personally going to start doing is I'm going to start working my way up these time frames to see, can I find a good looking engulfing candle? What I want to identify is the biggest engulfing candle on the highest time frame. One more time, the biggest engulfing candle on the highest time frame. So I'm going to go to the 2 hour, don't see an engulfing candle. Go to the 3 hour, don't see an engulfing candle. Go to the 4 hour, I do see an engulfing candle. So if I remove these drawings, ladies and gentlemen, right here, right, this is an engulfing candle. How do I know that? This green candle is bigger than the candle immediately to the left. Now, not every engulfing candle looks the same, but as long as if it's bullish, the green candle is bigger than the red, or if it's bearish, the red candle is bigger than the green, that is a valid, engulfing candle, okay? So what I'm now going to do is, first thing I like to do is I like to take the 50% of that engulfing candle. Okay, why do I do that, you might ask? I got you. So within these engulfing candles, you might not necessarily know where the market is going to go to before it gives you that continuation. So the 50% can give you somewhat of a range or an area that you can look at. It's going to be the soft spot, the sweet spot, the equilibrium, and one of the magnets that the market is going to go to. It's also going to give you the highest risk to reward, the smallest stop loss, and biggest pip count. But what you have to understand is the market is not always going to pull back to the 50%. So if you just set an entry and hope that it happens, you might be disappointed because from back testing, the market a lot of times is not going to go all the way to the 50%. It might just come somewhere in the candle and then take off, and you're going to sit there crying and sad because you missed out on the whole setup. So what I like to be able to show people is I like to actually be able to identify a trading zone, okay? So that trading zone I'm going to identify from the opening of from the opening of the bearish candle to the 50%. Now within this zone, right, this is essentially where you could now look for some sort of retracement anywhere within this zone, okay? If you like to execute by market, you could then wait for some sort of rejection. Once you've gotten the rejection or the doji or whatever candle formation you look for to enter, you then can proceed to execute and get in the trade. For me, though, as I already told you guys, I'm kind of lazy. So I want to be able to look for an exact entry. So the way that I look for an exact entry is I also utilize the other Fibonacci, which is going to be the one that most people are more what's the word most people are more familiar with. Okay, so that's going to be the fib that you guys see right here. So notice how I have the 61.8 to the 88.6. Where I want to look to get in is pretty straightforward. Okay, so I want to use the fib levels to be able to look for an entry, but I want that entry to be within the entry zone. So the fib levels give me like an exact area to look at. So notice we actually have two different fib levels. Okay, we have one right here, right? We also have one right here. Okay, the 71%, the 78.6. Now remember what I said earlier. The 78% is a deeper retracement. It's also close to the 50%. But as I said, it is not a guarantee that the market is going to pull back to the 50%. So you can put your entry there, but if you miss out and you don't get a chance to get in the trade, you got to remember what I told you. So what I like to do is I don't care as much for the deeper retracement because I'm okay with having a little bit bigger stop loss. I'm okay with being at a little bit of drawdown if that means that I'm at least going to get in the trade. Some people try to get too cute with it and they miss the whole setup because they want a cute stop loss, they want a cute entry and all this other stuff. I don't really care about that. But like I said, I can only speak so confident because I back tested to where I know what works for me. So the 71% is the highest level of the fib retracement within the zone. Why am I not using the 61.8? Because the 61.8 is not touching this candle. It is also not within the entry zone. So by default, I'm going to utilize the 71%. Now, if you might be asking, why is my entry not exactly on the 71%? Because I like to actually round my numbers off. I don't want to just have like a random, like if I put it exactly on the 71%, it would be 91407. I personally don't like having my entries like that. That's just me. I prefer to have a nice, even round number. So with that being said, what I want you guys to look for is watch how the market gives us a retracement. Okay. Plays around a little bit. And then it eventually takes off. Okay. And just like that, guys, that is basically how we were able to take advantage of that trade. So as I said, it went about 137 pips total. At the time I created the thumbnail, it was only 92 pips. But that's the reasoning why you guys want to be able to hold your trade. So also, don't forget, you do have access to my Telegram chat. So let me see whenever I actually called this out. This is around January 4th. Okay. So I'm gonna go back and find January 4th. I really need to start making these videos sooner because I'd be taking my time to make these videos, but you know, we're still dropping videos every single day of the year. All right, here. So look at this, right? Usdchf, right? You see how I had the market set up, okay? And you guys are also able to see how I managed to trade. So let me walk you through, okay? So I'll let you guys know at one point in time, we were up 20 pips. I also want you guys to understand you have to be self-sufficient, okay? If you want to adjust your stop loss to break even before I say I'm going to do it, that's totally on you. So in this message, I said, by the way, when I say a trade is in profit, it is up to you to adjust your stop loss to break even. I'm personally going to hold, just want to give you the option. When I go break even, I'm going to say, hey, I'm going break even. So I didn't announce it in this message, right? The market went 30 pips. I still didn't announce it. So if you never hear me say adjust stop loss to break even, that means I am still holding it with my entry being open. Okay. Now look at what I said at 8:27 a.m. Adjust stop loss to break even. Obviously, at that point, that's exactly what you would have proceeded to do. Okay. Take profit. One guy hit for 29 pips. Adjust SL to break even. If you didn't already do so, take partials. We were then up 40 pips. Let's see. Up 55 pips, right? Now, the thing that I want you guys to understand is I ended up holding this trade into the next week. And the reason why I tell people do not manually exit your position, okay, is because you're going to miss out on the opportunity to allow the trade to continue going. So if you are the person that saw this big red bearish candle and you're like, oh my God, it's about to hit my break even, I'm gonna just get out. Look at what you would have missed out on, right? So if I go back to the chat, you see at one point we were also up 75 pips. Then I even told you move your stop loss up in profit. So what does that mean? You would have then proceeded to do what? Move your stop loss from entry to the first take profit, right? Which would have secured you. It would have secured you, I think like 29 pips because I was the first take profit. I then said trade is currently up 80 plus pips. Feel free to secure some more partials. So basically, when the trade ended up getting to this 27 extension level, since I saw this high was also broken, I basically say, you know what, go ahead and take additional partials, okay? So at that point, you guys would have what? Taken additional partials, right? So next, the next thing we're going to speak of, my bad, give me 1 second. The next thing we're going to speak of is I kept scrolling, right? And I'm gonna show you guys the following week. So let's see. All right, right here. So look, this is the next week. Remember, the trade was sent out on the 4th. This is January 10th. That's literally almost an entire week. But what's wrong with holding a trade? I mean, you're just going to make more money. There's no reason to exit. Up 95 pips, R&R 1 to 3.5, still holding from last week. Now I'm telling you to adjust your stop loss even higher. So now you're going to secure 50 pips if your break even gets hit. And guess what? Take profit 2 got hit, 114 pips, risk to reward 1 to 4. And then I simply let you guys know, holdyourtrade.com. Okay. Now, with that being said, if you guys want to be able to have access to my Telegram, you can follow me on Instagram. Okay. Which I've mentioned multiple times throughout this video. There's a link in my bio that has my Telegram link. You can also look in every description of my YouTube videos. Every YouTube video in the description has my Telegram link. Now, with that being said, if you guys came to the video, learned something from the video, appreciate the video, make sure y'all go ahead and hit the subscribe button, because I know you guys appreciate what I'm doing. And that's a way that I can see that you guys appreciate it, right? Next thing, right underneath the subscribe button, hit the thumbs up, hit the like, leave a comment. And as usual, I'm going to see you guys at the top, not from the top, because the bottom is way too crowded. So you won't want to be. Peace.